bring you the stories that matters. So join the conversation and stay informed with Business Daily on Some TV. Watch on Facebook at Some TV and on YouTube at Some TV Live. Here are some of the headlines. Trump tariff threatens FMCG recovery as Naira takes hit. S&P 500 records lowest close in almost a year. Nigeria to generate $200 billion annually from space industry regulations. Now the news in full. Nigeria's fast-moving consumer goods FMCG sector is facing a dim outlook due to President Donald Trump's sweeping tariffs, which has rattled global markets and put pressure on emerging market currencies, including the Naira. The Nigeria FX market has been negatively affected by offshore investors' flight to safety, with increasing domestic dollar demand putting pressure on the Naira. The currency fell 2.8% on Monday, despite the Central Bank of Nigeria injecting $321.7 million to shield the Naira from Trump's tariff fallout. With 14% tariffs on import, Nigeria raised capital flight as higher U.S. rates attract global investors, leading to weaker Naira and reduced availability of foreign currency. Importing raw materials for production, job declines, and local prices increase. Kemi Abiodun, a consumer goods research analyst at Lagos-based Cardinal Stones, notes that the recent tariffs are changing the direction of things. If it goes on this way, we might not see an impressive performance as estimated at the start of the year. Some of the strategies for mitigation includes to manage FX volatility. Firms have implemented strategies such as replacing imported raw materials with local alternatives, front-loading inventories, exiting business segments with high forex exposure, full settling foreign-dominated loans. The FMCG sector may need to broaden its horizons by seeking out new markets or making products appealing to non-consumers. Renegotiating new trade deals with lower tariff could also be an option. The S&P 500 plummeted on Tuesday, closing below 5,000 points for the first time in nearly a year. After an early morning rally fizzled out, investor optimism dwindled as the midnight deadline for tariffs loomed. With no sign of last-minute delays or concessions, the benchmark index, which dropped 1.6% on Tuesday, has shed $5.8 trillion in market value since President Donald Trump unveiled major global tariffs against U.S. trading partners last Wednesday. This represents a staggering 12% decline over 4 days, marking the largest 4-day percentage drop since the pandemic, according to LSEG data. S&P 500 fell 79 points, 48 points, or 1.57% to close at 4,982.77, its lowest level since April 19 last year. Dow Jones Industrial slumped 320.01 points, or 0.84%, to close at 37,645.59. Nasdaq Composite lost 335.35 points, or 2.15%, to end at 15,267.91. The White House confirmed that 104% tariffs from China will take effect on April 9, despite nearly 70 countries reaching out to negotiate reduced impact from U.S. trade policies. China has vowed to reject the blackmail nature of Trump's tariff threats. Quarterly earnings season kicks off later this week, with J.P. Morgan, Morgan Stanley, and Wells Fargo set to report on Friday. The S&P 500 teeters on the brink of bear market territory, down nearly 19% from its record close on February 19. The bear market is officially declared at 20% below. Global oil prices have hit their lowest level since February 2021, with Brent crude futures declining 3.79% to $60.44 per barrel. and U.S. West Texas Intermediate WTI crude futures dropping 4.13% to $57.12. This sharp decline is attributed to escalating trade tensions between the United States and China, dampening demand expectation and raising concerns about a potential global oil glut. The implementation of President Donald Trump's 104% tariff on China imports have escalated fears of prolonged trade war, potentially stunning global economic growth and reducing fuel demand. OPEC has agreed to increase production by 411,000 barrels per day in May, contributing to potential oversupply and further pressuring the market. The trade conflict has triggered mounting fears of an economic recession, impacting investor sentiment and market stability. The recent plunge in oil prices poses significant risk to Nigeria's oil-dependent economy, with crude oil contributing about 80% of government revenues and 95% of foreign exchange earnings. Prolonged price weakness could exacerbate fiscal pressures, threaten macroeconomic stability, and lead to wider budget deficits. Nigeria's 2025 budget benchmark oil price of $75 per barrel is significantly above Brent's current level. Sustained shortfalls could lead to increased borrowings and further strain on the foreign exchange market. The narrow Brent spread and surplus outlook may discourage fresh investment in Nigeria's upstream sector. Nigeria's federal government has announced plans to generate over $200 billion annually through the regulation and licensing of space activities. Minister of Innovation, Science and Technology, Chief Uche Naji, revealed this during a workshop on space regulation, spectrum management, and licensing in Abuja. The government expects to realize over $200 billion annually with an 18 to 20% yearly increment. Space technology will be used to detect and track ships entering Nigerian waters, potentially generating $20 billion annually in revenue. The National Space Research and Development Agency aims to implement a structured licensing system for satellite launches, spectrum management, and data services. The global space economy is projected to reach $1 trillion by 2023, and Nigeria aims to capture a significant portion of this market. The federal government will work on advancing national space policy to include relevant areas of modern space operations. This move is expected to position Nigeria as a key player in the global space economy. The Ogun State government has announced the launch of a private aluminium and copper recycling plant by Neville Limited in Mowe, expected to generate $150 million in annual revenue once fully operational. The plant will focus on recycling aluminium scraps from car engines, cans, and other metals into high-quality ADC-12 for export to car manufacturing companies in Asia. The plant is projected to generate over $150 million annually and employ more than 500 people. Mowe was chosen for its proximity to major ports like Tinkan, Apapa, and Lekki, as well as access to affordable gas, skilled labor, and a well-developed road network. The plant is expected to reduce carbon emissions by approximately 377,460 tons annually, equivalent to removing 82,000 cars from the road. The recycling plant is expected to drive industrial growth in Ogun State and Nigeria, contributing to the national tax revenue and exchanging the state's reputation as a key industrial hub. Governor Dapo Abiodun expressed strong support for the project, emphasizing his administration's commitment to fostering investment and economic development in Ogun State. The Global System for Mobile Communication Association, GSMA, has revealed that $1.68 trillion flowed through mobile money accounts globally in 2024, demonstrating the growing role of digital finance in facilitating financial inclusion, and economic activity worldwide. According to the State of the Industry Report on Mobile Money 2025, mobile money services processed approximately 108 billion transactions in 2024 alone, representing a 20% increase in transaction volume compared to 2023. The GSMA report noted a key trend: the growth rate of transaction volumes are consistently outpaced the growth in transaction value for the third consecutive year. Consequently, the average value of a mobile money transaction per active 30-day account declined slightly by 4% in 2024. Despite this, users' engagement with mobile money platform continued to deepen, with the average activity 30-day mobile money account seeing a 4% increase in total amount transacted and an 8% rise in transaction frequency compared to 2023. The surge in mobile money use reflects an ongoing shift towards digital financial services, particularly in emerging markets where traditional banking infrastructure remains limited. With more individuals and businesses embracing mobile money for day-to-day transactions, remittances, bill payments, and savings, the ecosystem continues to mature and expand in scope. According to Vivek Badrinath, Director General of GSMA, at the end of 2023, the total GDP of countries with mobile money services was 720 billion higher than it would have been without mobile money. Presco PLC have reported a pre-tax profit of 113.2 billion naira for the year ended December 31, 2024, as outlined in its recent published audited financial statement on the Nigeria Exchange. The figures represent a substantial 128.74% increase compared to the 49.49 billion naira recorded in the previous year, driven by a significant surge in revenue. Now let's look at the revenue. For the revenue as 207.5 billion plus 102.6% year on year. For cost of sale, we have 65.5 billion plus 72.92 year on year. Now for the gross profit, we have 141.9 billion, that's plus 120.04% year on year. Now gains on biological assets, revaluation 29.9 billion naira, that is plus 136.85% year on year. Now for the operating profit, we have 125.7 billion, that is plus 114.56% year on year. Tax profit has 113.2 billion, that is plus 128.74% year on year. While total asset is at 475 billion plus 153.97 year on year. Retains earnings at 126.7 billion plus 73% year on year. The group has recommended a final dividend of 42 naira per 50 kobo for registered members, pending approval at the annual general meeting. As of April 8, 2025, Presco stock is priced at 785 naira, reflecting year-to-date performance of 65.3% in the Nigerian stock market. In the previous year, 2024, the stock achieved a year-to-date performance of 136.8%. The ECOWAS Bank for Investment and Development has approved a combined financing package of 230 million euro and $10 million to stimulate economic, socio-economic growth and regional development across West Africa. This funding aims to support small and medium enterprises, infrastructure, and agro-industrial growth in the region. EBRD approved a $50 million line of credit to Sterling Bank Limited, Nigeria, to support SMEs in critical sectors such as health, education, agriculture, renewable energy, and transport. In the Republic of Benin, Benin Cashew SA received a €10 million facility to co-finance the construction of 5 cashew nut processing plants and a cashew balsam production unit, creating 1,666 permanent and daily jobs. EBRD approved a $180 million credit line to Motor NGO Nigeria to support the Kano-Maradi standard gauge railway project, enhancing cross-border trade, economic integration, and mobility between northern Nigeria and the Republic of Niger. This project aligns with United Nations Sustainable Development Goals, particularly SDG 9, industry, innovations, and infrastructure, and SDG 13, climate action. The funding also supports EBRD's long-term strategy to prioritize investment in sectors that accelerate inclusive growth, promote regional trade, and enhance economic resilience. With this investment, EBRD's total commitments in the sub-region now stand at $4.5 billion, demonstrating its commitment to sustainable financing and regional transformation. That is the end of Business Daily for today. But before we go, here's a recap of the headlines. Okay, sorry, thank you for joining us on Business Daily. Until next time, stay informed, stay ahead, and we will see you on the next episode. Watch us on Facebook at Som TV and on YouTube at Som TV Live. I am Abraham Minor Joda.